Good morning, everybody. It's Chris here from Serene Education with the 4 majors and that's update for the 26th of April 2013. Morning, guys. As per usual, using the FX8 now, using our template, which is this little box down the bottom here, which is a very, very good indicator of sentiment within the longer term as well as the intraday. So, great setup tool. And what we're doing is we're going to be applying it to the 4 majors this morning. Starting with the euro against US dollar. You can quite clearly see I have my hourly chart open here. This is my execution chart, time frame, and you can quite clearly see I have a yellow band on here. You're thinking, what the hell have I got a yellow band on here? Primarily because price needed to get out of this consolidation band. Apologies, guys. I don't have caffeine in me yet. Because primarily I don't want to be trading any consolidation. I want to be trading either the upside or the downside of this band here. You can quite clearly see that euro has been stuck in this time warp for a number of, what are we going, for almost a full month now. And you can see clearly just recent price has broken slightly to the downside, however not really moved with a lot of momentum, i.e. breaking below this white line over here. This is my trigger line. I needed to see price below that, but outside of this band, which is a good signal. So you can see quite clearly the 1300 mark, which for euro against US dollar is a strong major support and resistance level psychologically as well. Getting below it, however, not really moving forward. As you can see, the RMO getting below the zero line, however, MACD above the zero line, telling us that there was no true sentiment in that, and obviously price going sideways at this level. So having to break below this allows me to gauge when market sentiment is moving with me. We had a breakout here, however when we saw the breakout, the pullback, we didn't see the continuation happening above this 38.2, which happens to be our long-term support and resistance fib line at 38.2. so draw your major high and major low on your monthly time frame, plot all those lines on your weekly, daily and 4-hour, and then progress forward. So at this time over here, you can quite clearly see that euro is still holding on to this consolidative range. So not really making any higher highs, not making any lower lows. Pretty much going sideways. Ideally wanted to be breaking below this level here. Ideally. So if you can get below this white line down the bottom here, which is, if you just go for this run over here, 12, what's it, 12.96, what's it, 12.9689, then we're looking at cleaner air to the downside. If it gets above the 38.2 here, then we're looking at cleaner air to the upside. So very, very important that we get out of this bandwidth here. So for me, trading longer terms, I don't want to be trading this consolidative range, because then I'm obviously applying too much risk in my favor, and I want to see clear direction. You can see all the moving averages on my 1-hour time frame pretty much flat, not really giving us any true direction. So I want to be trading more directional trend movement, momentum, and you can see intraday I'm getting mixed signals. That goes through my long term, also my intraday, bit of selling, bit of buying, not really giving us a true direction here. And so if that's the case, then I'd rather stay away from it and plot my trigger alerts on this particular pair. On to sterling. This one over here, we had some nice movement to the upside, looking at a 4-hour time frame. Very much a nice strong 4-hour counter break yesterday above the current daily high, which is here at 38.2, which is a good sign because price was consolidating, not really moving anywhere. You can see this one's a slightly tidier layout than the euro against US dollar, and this major move to the upside yesterday was generally caused because of those figures that came out for quarter-on-quarter GDP figures. They came out a lot better, a bit more expansion. We were expecting a likelihood of a third dip recession. That failed to materialize because they were expecting 0.2% expansion, and it came in at 0.3, so higher than the forecast, and the previous figure was a negative figure. So very good for the US, for sterling, and pushed the price way up above the current high on the daily, above the 38.2 here, and now you can see it's been consolidating ever since. So what we want to see now is the 38.2 here at 1541.60 remaining as support, and as long as that happens, then we should see price building on that. So at the moment now, the RMO, my 4-hour time frame, is above the zero, which is positive. MACD is above the zero, which is positive. However, we're seeing consolidation here with the dark green lines and the pullback, and you can see that price is just pretty much consolidating. As long as it happens all above this 38.2 mark here, so this 15,1600 intraday needs to be your intraday support. Price cannot get below that again, because if it's doing so, then it's not making higher highs, which means that we should be looking for lower lows. Okay, intraday you can see the long-term sentiment for this particular candle, the monthly and the weekly, is still negative. However, daily, 4-hour, hourly, and stuff like that are starting to look more positive as we see that buying sentiment. Intraday, because we're seeing consolidation, your 5, 15, and 30 minutes should be mixed. However, you can see the 30 hourly and 4 hours are still pointing higher. So if all these candles over here remain and start building on the upside of 38.2, then we should be looking for higher highs for the foreseeable, for the remainder of this week, and then going into next week. US dollar Swiss franc, we saw some movement recently while every other pair was stagnant, breaking above the institution, which is a good sign on my 4-hour here. You can see over here, for example, mixed signals throughout the month and the week. Daily very strong, but buying into a major consolidation area here on the daily. You can see this is our prior high, and I've marked it here on a dark white line. And my downtrend, you can see this white line that's trending over here is my downtrend. Here we go. So there's my all-time way back here since 2012. You can see the consolidation that's happening recently on this particular pair on the 4 hour. So price breaking above the institution, pulling back. As long as it maintains now above the institution, then we should be looking for that buying sentiment to take hold again and to push price and reattempt this current high. The 50% line over here is my 50% from my weekly time frame. So from my lowest point on the chart, I think it was last year, to the highest point in the chart, and this is my 50% line. So as long as it stays above 50, above the institution, then let's hope to see this building. All my smaller time frames, so imperative that it stays above the 50% line. If it fails to stay above here long term, then ultimately we're going to start looking for negativity, because as we quite clearly see, if she's making a low here, this high, sorry, if she's making a high here and she's failing, then she's going to be lower than the current major high that we have intraday, which is then starting to look negative because this trend line has been broken. So if this is to be positive long term, we need to be breaking swing lows. Okay, the highs, the prior high, we need to be breaking that in order to be making new momentum highs. And if we can't do that, then we're going to be falling further to the downside. And if we're falling down, then we should be heading back to prior swing lows. So here would be our target. So if we fail here and fail at the 50%, that will be our next target. Break that, then we're making lower lows, and then we should be looking for prior lows or prior support resistance levels as our target. So very, very important. If this is to be positive sentiment, getting above the institution, we do need to get above all of this over here at the top. Very, very important. If we don't get above all of this at the top here, then we can be running into resistance. And we're running into resistance, as I mentioned. Yeah, you can quite clearly see there's a lot of resistance here. You can actually draw this. This is a very major support. It's got to get above this area here in order to be making higher highs, in order for me to think that price is going to be looking long. Daily's all looking positive upside, but you can see my intraday is being forced lower because of this major consolidation area that we had just recently here through March. So it's imperative price gets above that. If it fails to get above that, then my psychological trading cap back on again makes me think that if we get below the 50% retracement, then it's going to be heading back towards the 20, the 38, the 23s, etc. to the downside, and that will be my target for the foreseeable future. On to the last pair of the day is the US dollar Japanese yen. Here we've had a lot of resistance, guys. We've been resisted here. What's it, since the 11th of April? We've come unstuck now at the 50%, which is our major fib retracement from our monthly high and our lowest point. So high in 2007 to our low in 2011, 2012. We've broken through the 23, the 38 recently, and now we head into the 50. But you can see price is now failing at the 50. It's this reattempt recently of the same high. You can see the MACD is lower than this one. So we're seeing, even though price is reattempting the same spot, our MACD or the sentiment behind it, the buying sentiment behind it is waning. And you can see just recently on the 4 hour we had a negative candle that's in play now. We've got another 87 minutes of this candle to form, but if it forms and it's lower than here, then we should be looking downside back towards institution as our first target, because everything intraday, even though we've had a lot of positiveness for the US dollar against the Japanese yen on a monthly, weekly and daily is looking positive, intraday that sentiment is starting to back up to the negativity now. R squared is telling us sentiment is positive. It's positive in a negative trend. Okay, everything's starting selling, so this is positive sentiment in the direction of these red arrows. So that's what we want. 5 minutes looking a bit consolidative because of the breakout this morning. However, as long as these ones, your 15, 30 hourly, 4 hour starts, to remain like this, then that sentiment's going to start to look negative intraday. And if that's the case, guys, we should be looking downside because this becomes a major resistance level. We should be looking downside to our prior support and resistance level, which is here at the institution around about the 96.76 mark. Okay, you have to have that out there. So resistance near term, which is now going to put a lot of negativity on the downside. You can see a lot of resistance here. Price cannot get above that. So if it cannot get above it, then it's going to be forced lower. If she's being forced lower, then we need to look at prior targets to the downside as first target. So here would be a nice one here at 96.76 in my eyes, back to the institution to a current consolidation area. RMO is just dipping its toes on the 4 hour, just below the 0 line. MACD has been below the 0 line. However, you can see my intraday sentiment is looking negative. So long term upside, but intraday negative. If it's negative here in resistance, then it's going to be pushing it lower. This is my target. Okay, that's it, guys. Short and sweet, to the point. That's how your trading should be. Very mechanical. Just let the charts do the work for you. You just work out, okay, if there's a resistance above me, where's it likely to go to? If there's a support below me, where's it likely to go to, etc. That's all you got to do. Then all you need to do now is apply money management to that. So look for your time frames you can be trading. If you're going to be an intraday trader and it allows you to sit at your desk all day, or then trade the 50-minute entries, look for all that sentiment to comply with your money management, your risks, and then you just press the trigger. If you unfortunately have a 9-to-5 job, then you can't obviously trade a 50-minute chart, guys. Okay, rather look at your 4-hour and your daily time frames. Yes, your spreads are going to be that much greater. That's just one of the negativities of trading dailies. Unfortunately, we cannot do anything about it. However, if you are trading, if you are working 9 to 5, it's pointless you trying to trade a 50-minute chart. It's not. It won't work. All you will do is set yourself up to failing. Don't do that. Okay. Rather go in with the outlook. What time frames can I trade, and apply that mentality. It will be hard. You will take a little longer to make some profits because obviously your money management, and if you've got a very small a small trading pot, it's going to take that much longer to build. If you have a bit of cash, then trading bigger time frames will be the sensible option. So please, it's very, very important to choose a time frame and to be realistic. Okay, if you're working 9 to 5, then you can't trade a 15 or 30-minute or an hourly chart. You have to trade the bigger time frames. So you can get away with 2 4-hour candles because that's eating into most of the day. So go for your 4-hour candles and the daily in particular. Okay, otherwise have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade Serene.